Alrighty, so glad you could join us today as we look at our ag commodity trade. Now, Marlon Bowling with you, your tour guide to the ag commodities. And well, here we go. Let's dive right in and take a look at the corn market, shall we? The quotes are provided by Bar Chart, and the nearby September corn is gaining 7.5 cents now. We're at $5.99. Oh, so close to $6. And we have December new crop corn at 602.5. That would be up 6.25 cents on the day. Soybeans have been leading the charge, and look at them go. September soybeans now 33.25 higher at 14.37, and you have November new crop soybeans 26.5 higher at 13.96.25. If you've been wondering if November could hit $14, it did a little bit ago. It hit $14.50 before backing off of that by just a little bit. Now let's look at the wheat market. We'll start in Chicago. September now 4.5 higher at 768.25. In the Kansas City hard red wheat, we had September 7.25 higher now at 842.75. Remember how we had been lower earlier? Now we're closer to the high of the day. Things are really starting to perk up here in the grains. In the spring wheat market in Minneapolis, September is adding 7 cents to the upside. We're at 882.25 right now. New crop December cotton, it currently trades at 93.43, still down 100 points on the day. Well, Ted Seifried joins us now. He is with Zaner Ag Hedge. He's located in Chicago. So a bit of an upward momentum day here in most of the grain markets here. The weekly export sales numbers, nothing to write home about when it comes to the grains. But boy, I tell you what, you look at these soybean prices tacking on 30 cents all of a sudden, it gives me a little hope that maybe there's somebody in there snooping around to buy some soybeans behind the scenes today. Have you seen anything for telltale signs, like maybe shipping rates changing today or anything?
Well, I've been talking to my cash exporters, and so far not seeing any hard confirmation of that. But look at the strength that you're seeing in September. That would suggest that if there is some buying interest out there right now, it might still be for old crop, which is really interesting considering that we saw a net cancellation for old crop in this last week. So, yeah, you would think after the big rally that we had last week and then the pullback that we had earlier this week that, maybe there would be some buyers interested in coming in. Now, the big problem that we've had in the markets all week has been, yes, a slightly more moderate forecast, but really we're worried about what China is going to do with Nancy Pelosi visiting Taiwan. And to this point, it really just looks like they're doing some military exercises, rather aggressive ones, but we haven't heard anything about commodities. We haven't heard anything about, we're not going to buy U.S. soybeans and things like that. And if they are, in fact, really sniffing around to buy something, especially if it's old crop here today, that would be a fairly positive sign. There's really kind of two schools of thought here, Marlon. If they were going to do something in retaliation on the commodity side of things, they could, the first thought was they could just stop buying U.S. altogether. Well, they actually can't. But they can try to do like what they did at the beginning of the trade war and really focus on Brazil and every other outlet that they can possibly exhaust before coming to us. But the other one is, U.S. politicians have said that their number one enemy right now is inflation. Well, what if China said, hey, we could buy all the soybeans, buy all the corn, and buy all the extra crude oil and really push those markets up to record highs, and there's your inflation. You wonder if that's in their playbook or not. I kind of lean towards not, just because if they are going to invade Taiwan, they need things sooner rather than later. But I wouldn't put it past them to do something like that and then cancel later on. So it's a very complicated, a very difficult thing to understand to what China's reaction might be. But at least for the moment, we're feeling like they might not, at least the worst case scenario of them not buying doesn't seem to be the case.
That's an interesting take on what could be happening out there. It kind of puts a lot of thoughts on their head a little bit. So you do have to really wonder how this is all going to tie together. All right, Ted, we'll take a break right here. We'll come back in a moment. We're back talking with Ted Seifried of Zaner Ag Hedge. He's located in Chicago. Ted, the livestock trade today, it's just kind of drifting. I don't know if it's really accomplishing much. Why is it wasting time here today? What do you think is it?
Wasting time. Well, the strength in the corn market isn't doing the feeder market really any favors. And the lack of export sales, I'm going to say, for live cattle or for beef, isn't doing live cattle really any favors either. So, yeah, just down a little bit. It's not an implosion, and the charts still look good. They're still on a bit of an uptrend. we're just kind of trading in the middle of this upward trending channel. So I'm not ringing any alarms here today, although seasonally, we would expect for things to start coming down here. So we have to keep a close eye on that. But at least for the moment, the uptrends in both feeder cattle, live cattle are still intact. In the meantime, we did have some fairly decent export sales for pork. China was a bigger buyer there too. So that's encouraging. And you've got the hog market responding to that. Up a bit, but like you said, nothing too impressive to write home about. So yes, it's a little bit of strength, but certainly we'd love to see more.
It was encouraging to see China in there as a big buyer of U.S. pork last week, but they didn't buy any beef, but pretty active on the pork side there.
Yeah, I mean, a little over 16,000 metric tons. That's one of the bigger purchases that we've seen. I go back to last year when they were buying, or even the year before, where they were buying because of ASF, and we were just seeing records amount of pork sold, and specifically sold to China. We've kind of gotten used to not seeing them very active on that pork export sales list. But to see a bigger number like that is really rather encouraging. And again, we talk about is China going to stop buying our goods? And albeit this export sales report comes from before the beginning of this week with Pelosi. But still, it's nice to see China active on our export sales list, really kind of across the board, except for in beef. So again, that's kind of encouraging, and we're up a bit, up a little bit there in hogs, not tremendously, but it is a nice day.
We'll have to see if that will continue through next week. Now let's look at our live cattle prices here. The quotes provided by Bar Chart are showing a downward trend across the board. October down 40 cents at 143.55 right now. On the feeder cattle side of things, you have September dropping $1.12 at 181.77. Over $1 lower all across the board on the feeders here so far today. Lean hogs, October is 62 higher though at 96.47. Well, let's look at our livestock trade. Ted, thanks for the information. Good to talk with you again. Ted Seifried of Zaner Ag Hedge. Suzanne, back to you.